everyone's killing it right now, by the way. Just got to be making money hand over fist.
Who's that?
It's the people that make boxes.
Yeah.
You know what I mean? Everything you buy has to come in like a fancy box. What's the deal? Take us to the point we ordered something the other day and it just kind of came in a normal box. I was disappointed.
Yeah, it is nice when you get the cool box.
Jeez, man. Welcome to the Closing Beat, everybody. How we doing today? Happy Tuesday. Tuesday? Yes. It's Tuesday. Wow, kind of feels like a Wednesday or Thursday. Hope y'all are doing well out there, and welcome to our show, of course. Happy to help and teach and everything. We're financial advisors. We just like to teach. We like to talk about the markets. We're not necessarily short-term traders, though we do a fun show at about lunchtime. We call it Office Trades. You can participate if you'd like. It's free for clients, $13 a month. If you are not a client and want to participate, we just show you the trades. You know, we're just having fun doing some things, and we'll cover a couple of those as we go. I'll give you updates, tell you how things are going there. But it just always frustrated me that there were the people that are like, I'm a trader. And you're like, well, let me see your account. Let's see what you're doing. Are you making lots of money? Are you losing lots of money? What's so hard about that? Just show it. So anyways, that's what we do. And hopefully, well, it's been going well, actually. So we'll hope that continues there. As far as the stock market goes today, you could say the same thing. It's going well. Don't know why it's going so well. There is recession indicator after recession indicator after recession indicator out there telling you that that investors are pricing in weakness going forward into the market. But if you look, here's the S&P. We broke above the highs. That's good news. So we broke above this prior high here. It was a broad rally today. Really small cap was kind of what led the way today. If you're looking at the Russell 2000, you'll find that's the biggest gainer today, breaking above known resistance there. And so this is another one of these scenarios where it's not about believing in, support and resistance and all that. It's about other people believing in it. And when other people believe, they take action. And, you want to be a part of that, I hope. So that's good news for the Russell. I'll get rid of this downtrend here because we're done with that. We broke through that downtrend. This is now your new support here, and the 200-day moving average is the next thing in line there. If you look at the S&P 500, we're now down less than 3% from going positive. So another 3% move. What's that? Day and a half, 2 days, and we'll be at positive. It's currently on a pace where it's gaining 2.2% every 5 days. Now, that is very abnormal, just so you know, right? If you're looking at the stock market and you're like, this is great, and everything's going up, 2.2% every 5 days is extremely abnormal. The volatility in the market to the upside right now is intense. The Dow is actually the next closest to being positive, just a little over 2%. And it's on a pace there as well, a little bit less of an average pace, but still doing well. The NASDAQ, if you look at the NASDAQ, back above the 200-day moving average, it's down about 6% year to date, but it's on pace to where it's gaining 4% every 5 days. Isn't that a little much? Right? Doesn't that strike you as kind of odd? I mean, it's great. We'll participate. We'll have a good time with it, but it's a little bit much, and that sort of thing is not going to continue. If you look through the S&P here today, it broad rally, so you're going to find a lot other than some healthcare stocks, some oil stocks. A couple of the banks were just a little bit weaker on the day, but the big movers, your Microsoft, things that lead the markets higher. Microsoft did well. Apple's on a tear, almost back to all-time highs there. Alphabet, you know what I'm talking about here. We used to call them the FANG names, right? Maybe people still do. I don't know. But you got that moving higher. Amazon added a few fractions of a percentage point on the day. Tesla even moved a little bit higher there. Facebook back into the 50-day moving average. All good stuff, right? All good stuff. What's the face for? Oh, stick with this one? I'll stick here. That's okay. Basically everything's doing well. Banks, we talked about some of these banking stocks the other day. Visa back above the 200-day, MasterCard going right along with it. Just incredible moves. And so it's like, enjoy it while it's here, but that sort of thing, this pace, don't get comfortable with it. It's kind of like last year when the stock market, even Disney got a good move today. It's like last year when the stock market was really quiet, and all year we just went higher and higher and higher, very slowly. And then all of a sudden we have a 5% pullback and people thought it was a crash. We have a 10% pullback and people go, oh my gosh, this is like the end of the world. No, it's because we were lulled into that quietness for a year, 18 months actually. We were just lulled into quiet, slow-moving markets. Now we have a faster-moving market. Well, the opposite can happen. You could say, well, hey, we're gaining 4% every 5 days. This is amazing. That doesn't continue. So when it starts to slow down, you don't question that you have a problem. You say, well, the markets are just going back to the way they were. In the meantime, it's really fun. I mean, it's exciting to watch. Obviously, if you're participating, it's good stuff to see. But that's what's going on with the general market. Crude oil down a little bit more here today. It actually recovered quite a bit off its lows. This pullback erased more than half of itself, came back to the 50-day moving average. Yesterday was actually the third largest drop since April of 2000 when we saw oil prices go negative. Remember that? It actually went negative a little bit. So that was a very, very big move for that one there. And in the energy space, one that sticks out, Chevron pulling back. That's good news for us. We have a larger position in Chevron to the downside, so we're happy to see that. Hey, just some other names. ConocoPhillips pulled back, and you know, the likes of that. I'd also mention, we'll come back to that actually. But that's crude oil. Gold down just a little bit as well. Back to the 50-day. It did bounce off the lows, but pretty wild day for both of those and really all commodities in general. If you're looking at bonds, they continue to come off of lows. We talked about that the other day where bonds don't like to be down 10%. When they fall 10%, average move is to the upside. I gave you the stats on that yesterday, actually. If you want to take a look, the average performance for something like the TLT after falling 10%, I'm trying to be cool here. Nope. There we go. Average bounce 1 month later is 4.67%. We're working on that. That's basically all that's happening here. So the historic performance of the market is just doing what it does. It's good for us because we have the TLT long in our office trades segment that we do there. But if you look at bonds, they continue to shift. If you were to follow the yield curve, that's probably something we could talk about a little bit more, but the yield curve is actually showing more risk in the short term, meaning higher rates in the short term. When things like that happen, usually you're following the ratio between the 2 and the 10-year. When things like that start happening and people are assuming more risk in the short term, well, that tends to mean recession. Otherwise, you would see a normal, what they call a normal yield curve, where the longer you take risk, the more interest you should charge and more interest you should get. So the shorter you're taking risk, the curve starts down here and starts curving up, or in your case, it would look like this, right? So right now we're not seeing that. We're seeing this, right? And so that's more of a flattening of the yield curve. It's more of a potential inversion. I think we're still got a little bit to go before the 2s invert over the 10s, but essentially, that's one of the recession signals just kind of flashing before everybody's eyes, and investors are like, yeah, I don't care. It doesn't matter to me. A couple other things going on. Retail sales. Retail sales inventories here are exploding, up 20% month over month. If you take out autos, which I will put right down here for you, look at what you have. Right, you got a pretty bad little scenario there. If you take out autos, you're up 11% month over month. And so we got an issue here. We have more inventory of stuff coming into the market, but are people still buying that stuff? Is the demand still there? Well, one thing you can look at is you can look at consumer credit, right? If consumers are using credit and they're willing to sort of add more credit to their profile and use that to go buy stuff, that's good. But we're going in the wrong direction. Consumer credit is sharply lower, meaning people are not out there using those cards or willing to use those cards as much as they used to, right? So that's a bit of a concern there, not spending as much. Also, imports. This is sort of the consumer economic data you want to look at. Imports continue to run way above average. You could see that looking on the chart here. It's nothing special. We're running more than 10% above 2021's pace. Remember, nothing on the planet likes to price itself so fast and continue going that way. Anything that goes too far too fast always tends to pull back. So in short, the supply chain, I guess, if you want to sound smart, is being stuffed with new things. And I talked about this a couple weeks ago, where don't you worry about production ramping up and more stuff coming into the market, and all of a sudden there's just not that much demand there. What does it mean for prices of stuff. It means that prices come down. Well, what happens when prices come down for the stuff because people are less interested? Take like Lowe's, for example. All of a sudden you see weakness. We can't sell the stuff or as much of it, and we can't sell it for as high of a price as we used to. It's good news for inflation, but it's bad news for retailers. And so you're kind of starting to see a little bit of chink or kink in the armor, as they say there. So something to take a look at. Sector-wise, we had real estate doing well today because rates are starting to fall just a little bit and have overpriced themselves, which we probably made pretty obvious there. Tech actually started to bounce back a little bit as well. That's good news if you're interested in that. Year to date, let's take a look because year to date, you had some changing of pace today. Let's go over here. There you go. Energy is the leader by far. It's up 39.3% year to date. That's a little much right there, actually. But today we actually saw real estate make a nice little move in terms of taking over. What would that be? 1, 2, 3, fourth from the bottom. It was the worst performer. It moves down into fourth from the bottom, so a quick move there. You also have utilities now. One of the only sectors that's positive year to date. Utilities are up about 4%, and financials, they're not all moving in unison at the moment, but they're working on it. Financials up 1.5% year to date, and maybe trying to shake off this consolidation that they've had there. Now you need more than just a few of the Visa and the MasterCard I showed earlier. That's really not going to move the needle. What you need is Bank of America. Notice nothing really happened there today. JP Morgan up about 0.2%. Not much happened there. And Wells Fargo. You need some of the big banks to get going. Goldman Sachs had a good day. BlackRock, Truist, SIVB, if you're looking into regional banks, just to point out a few names. Yeah, and that's pretty much it. I'll stick with this here because maybe the other screen is not sounding very good today. As far as the office trades goes today, we did the office trades live, and we also posted another video on a trade that Cody wanted to do. But as far as trades go, I closed out Kroger. That's a small profit. I think it was like 18% of the total profit. I did not like how Kroger was starting to bounce off of these lows. It tried to pull back a little bit. This didn't really get anything done, so I'll take the small profit and be on our way. We closed the put side. We had a strangle on the SPY, so we closed the put side out for more than 50% of the profit. Allstate, the insurers, finally started pulling back, so we used Allstate to close out that for a small profit. And then the agriculture stocks. If you're looking around, you go, what got hit the worst today? Agriculture stocks, which is good for us because we were short. So look what happened. Too far, too fast. I'll look at any one of those. Anytime anybody wants to show me one of those, I'll do it. So CF, we closed for a nice profit. Mosaic, we closed for a nice profit. Everything went together at the same time. And CLF, we closed for a nice profit as well. I did not get the Starbucks. We have a ratio spread on Starbucks if you're interested, and it moved higher. So we're essentially just going to make a really tiny profit on what we sold. It'll be a 50% profit, but it'll be small dollars. So we'll point that out tomorrow. I'm attempting to close that position and just run away, but nothing so far. Also, if you saw the video posted, Cody had an idea on restoration hardware, and let's see if this works. Huh? How'd you do?
We're still in it, so that's good.
We're in it good too.
Yeah, I think they announced a 3-for-1 stock split. They did miss on earnings, but we'll see how tomorrow plays out.
3-for-1 stock split. I'll take it. Stock's still higher after hours. What are we at, like 384? All we need.
384 exactly, down a little bit. But
yeah, we'll win as far as 350. We'll call it 380 here today. So we sold the 350 puts for like $8, $8 even. We posted a video of that in case you want to know why or what we were thinking there. But it looks like it's going to work out, man.
I agree. Audio's not.
Oh, it's a little echoey. All right. It looks like it's going to work out. Cody's trade looking good there. I like it. Other than that, that is that's pretty much all we did there. So I'll move on to the new highs and lows for the day. 47 new highs. Look, there you go. Brown & Brown, the insurance company. This one, unlike some of the others, has continued higher. I would expect that you see this guy pull back here, right? You would expect that it's going to be pulled with the rest of the insurers as people take their profits. It's been a good move, right? So there's nothing wrong with it. It's just maybe a little pullback. Dollar Tree I thought was interesting because normally this is a slow poke mover. And it is right now. I'm not saying something's changed, but it is a slow poke mover to the upside. That's called a power trend. So you got a very tight and consistent power trend to the upside, which is more it's more like the stock, right? All of this in here is not like Dollar Tree. It does not tend to move like this. Around earnings, I'll give you that. But other than that, it is a slow, steady mover. It's kind of like commodities in general. If you look at something like oil, slow, steady mover. Welltower. Oh, here's the thing. I put a couple REITs on there. So you're looking at Welltower, Ventas, and Iron Mountain. Cody pointed out Iron Mountain to me earlier in the day. I looked around at the rest of them. They're all getting extended. So some of the REITs here, like Welltower, moving a little too far, too fast, right? Just playing that extension. Ventas also very extended here in a short term. There's maybe some things that we look at tomorrow in the office trades. And Iron Mountain is working on it. It closed near highs of the day, so the momentum is still there. People are still excited to pay up for this stock for some reason. As that continues, you may look for a little counter trend idea there. I'm sure we will in the office trades. As far as stocks in the news go, not a whole lot. It was actually a pretty quiet day. FedEx getting a new CEO. Stock's up 3.7%. I'll take it. We happen to own the stock in one of our portfolios here, so I'm happy to see that coming off the lows. Dave & Buster's, it's kind of a big move for them. Dave & Buster's reports earnings there that were weaker than expected. Revenues weaker than expected. Margins, I believe, were what came in a little bit higher there. And also, of course, people going back. They're going back to playing again, right? Get out there and play some games. Have a little fun. You can do that, especially here in Florida. So that's the news there. We also have earnings coming up for Five Below. Five Below's earnings are coming out. They beat 87% of the time, 82% of the time on revenue, and it's kind of a mixed bag in terms of which way they go, but it's already off to a good start. Paychex is the other one, right? Now, these guys are a little bit of a mess. They beat about half the time on earnings and about half the time on revenue, so it could be a coin flip as to what happens here for Paychex, but today added up another 2%, so no problem there. And then McCormick, you've likely had some of their spices. McCormick was downgraded today, right? They reported earnings that came in a little bit better than expected. They kept guidance the same. There was nothing magical about what they reported. It was just fine. So the stock basically stayed where it was. Probably a fair move for that. And what else do we have? Oh, sector-wise. We're moving into a point where you now have healthcare is being an overbought sector, materials, utilities, and next up would be, next closest looks like it would be maybe consumer discretionary, thanks to Tesla helping pull that sector. Sectors that are still more neutral, maybe, or not as overbought. Communication services, financials, and consumer staples. Everything else has naturally participated with the market in some degree, and so that makes it a little bit tricky to find new ideas if you haven't already participated in this rally here with the markets. All right, I will, while we're talking, yeah, Cody, it's getting better, man. 384 right in there somewhere. Looks like where we're going to open tomorrow. So kind of a non-event. There was a $45 expected move on Restoration Hardware. We covered in the show how to understand what that means and how to identify that. So that is posted. It's posted, right? It is posted in the research site. It wasn't a live video. We just did a quick one there to test out some new graphics and stuff. But other than that, I'll take your questions. I don't have much to offer in terms of the new latest and greatest something or other to talk about today. It is kind of a sit on your hands, do a little bit. It's a stock trader's market at the moment, but very tough to commit to any decent investment here. I saw Roku was higher. That's good. Maybe we're turning the bottom there. A lot of the discounted stocks like your Etsy and DocuSign and things like that, they also participated to a degree. But, boy, it's tough. It's tough to say now is the time I'm going to commit after the market's had this massive, massive move that it normally does not do. Now is the time that I'm going to commit lots of money to the market. That's a tough one. Brent says, I sell calls, aka SPY, closes above 456, sell my shares, someone else. So I made $3,000 in premium. There you go. Big move too. So any long options in the market, NASDAQ, whatever it may have been, boy, those should have cashed in, huh? Yeah. Eloy says, if tomorrow doesn't move like today, I think I'll start selling some smaller positions. What are you waiting for? Yeah. If you don't, someone else will. Yeah. Oh, yeah. Brent's taking some profits from the sale. Always likes to scale out. I'm with you on that one. I like to do that. Yeah, Apple on just a record tear here. Is it 12 days in a row? Straight green. Is that normal? You could use the research site to figure out how often does Apple go up 12 days in a row. I bet you it's not very often there. Andre says, hey, is the market setting up for a flash crash in the next 2 weeks since it went too far and overbought? A flash crash is probably out of the cards. That's a black swan event. It's something that would be triggered by a failure somewhere. And we wouldn't be able to have the same flash crash that we did before because of the circuit breakers now that they have in place. But could we have a decent pullback? Sure. And I don't think anybody would be shocked by that either to have that. Yeah. Ashish says, what a huge thrust we're seeing in the last few days. Any historical data when we see similar things in the past? It's very rare. I think I covered it on Monday to see such moves in the broad market and a lot of different areas or individual stocks like an Apple and things like that. You don't like to see things move too far too fast. Yep. No. Any thoughts on SoFi? Didn't get to buy the dip, but you like it as a long-term thing. I like SoFi. I like the company. The stock is a little difficult here, but I like it. I mean, it's a chance. You now know that you can take a shot down here, and you just have you admit defeat somewhere around 875 or 870. So a little risk for a potential bigger long-term reward, right? And you realize that at some point, that's what you're focused on. I've done trading classes on this in the research site where you can say, at what point do you go, the risk here of, let's just call it $2. The risk of $2 to make 6 over the long run, it's almost like you say, it doesn't matter if I have a 50-50 shot. If those are the only trades that I can put on, risk 2 to make 3x, you do those as many times as you can because you realize the math adds up where you don't even have to be right 50% of the time to make a profit. So it's intriguing. Yeah, I don't blame you. Yeah. Don't underestimate old Joe. Well, hopefully you can get gas prices down because it's, I guess we're trying to have lower prices here, but a little out of control. Yeah. Everyone ever look at the consumer staples by the S&P as a recession indicator? It would be a little misleading at the moment, wouldn't it? Because you have consumer staples underperforming. Wouldn't they be outperforming or be getting close to it, showing some sort of relative strength? What do you think is the most overbought from the FANG position? I guess Apple, right? Apple would, by any technical indicator anyways, would be the most overbought, if that's how you want to do that there. Yep. There you go. Yep. I don't think there's a ticker symbol. No, that'd be a clever one for an ETF, though. Huh? If the U.S. has food shortages, that's not good for confidence. Well, supposedly it's real. Supposedly it's happening. I saw a study out of Dartmouth, maybe, or Boston College, maybe. I think I mentioned it, where they found that people in the lower income levels were actually already starting to sort of hoard food because they figure, I might as well buy it at this price. If it gets worse, it'd be a problem. You don't see that much around here though, if any. Yeah. Confused with REITs moving higher with the rate hikes on the way, especially half-point rates as slated, but rates have already outpriced what the Fed has planned to do. That's the trouble. So, everybody said, oh, that's the trade, right? You want to short bonds because the Fed's going to raise rates. Well, we've now brought rates higher than where the Fed is even attempting to bring rates if all goes swimmingly for them. And so now you have a little reversion to the mean there. Oh, Tay's in Kuwait, man. I hear that's a cool place. Mama Jazz went there before, so that's a pretty cool place. Yeah. Yep. Pobbins got it right. It's a potential bear market rally. You see the biggest moves. We did that on the show last week. The biggest bounces in the market come in the middle of downtrends, which is a little hard to think of, right? Because you think, well, surely there has to be a big bounce during some rally. Biggest bounces happening during downtrends. Yep. Okay. Well, I appreciate you guys hanging out here with us today. I'm going to get back to work and do our thing here. We will, of course, be back tomorrow. So more excitement to come. We'll see what happens there. What do you think? A large gap up tomorrow? Henry, going for a large gap up? Is it a shortable large gap up if it is? Well, if we have a large gap up, we're doing the office trades tomorrow anyways, so we'll come back to you and see what's going on there. Enjoy the rest of your day. Adios.